I think discretionary trading is a really good source for automated ideas. And a lot of discretionary traders don't realize that. Like the best traders I work with have a really keen sense of what systems can be modelable and which ones can't.
Sitting down today with Dave Mabe. Looking forward to talk about trading. His experience in the market for more than 17 years now, maybe 20 years or so. You mentioned this before the podcast. So introduce yourself and kind of tell people more about what you're doing these days.
Hey, my name's Dave Mabe. I have been day trading for 20 years now. I've got several strategies that I run. I run 25 different strategies, trade those every day. They're all automated, so that keeps me busy and really sort of turned the corner many years ago when I went from swing trading to day trading, and certainly the automation helps a bunch.
How do these strategies run or trade? Or do you have to go and place trades yourself, or is it all kind of going in and out of trades by itself?
Yeah, it's completely automated. I felt like, I know enough about myself to realize that if I have to make decisions in the moment with money on the line, I'm just not good at that. I think that's kind of human nature to make the wrong decision in those moments. So I have to have a plan. So it's just better for me to have a robot just, make the trades for me.
I mean, we have to go back and kind of see when you've made that shift to systematic trading and stuff. But I want to go back in the very beginning. Tell me how you came across trading in the very first place.
Yeah. So I graduated from college, and my dad, I had a modest scholarship, and he gave me the money that he had saved that I earned in that scholarship. So I immediately put that into a mutual fund after I graduated, and that did well for a year or so. But I felt like I wanted to be more involved, so I started swing trading at that point. I was following some guru giving me stock picks to what to do. That worked well, but then he went on vacation, so there were no trades he was offering. So I was like, wow, I can't do this. Like, I've got to take more control of what I'm doing. So I started my time frame got shorter and shorter, and I took more and more control of what I was doing to really understand how I was doing. And then around probably 2005, I think I made my first day trade then. And I was, so I was very prepared. There was a vibrant trading blogosphere at the time. So there's a lot of sharing of ideas going on. And I sort of had a mentor that I was trying to emulate at the time. So I was trading this system, and then we would kind of share notes at the end of the day. And I remember one day saying, oh man, I had lost money that day. I was like, man, this was kind of a poor day. And he said, oh, I made money. What happened? And I said, well, you didn't trade such and such, whatever the symbol was. And he said, no, I've got a rule where I skip trades that have, I think it was like relative volume less than 5. And I was like, well, how'd you come up with that? He said, well, just intuition. So I realized, in that moment that people can be trading the same strategy, but have wildly different results. And it's largely because some traders have a better way to skip trades. Like, they're skipping the poor ones and taking the good ones. So when you add that up over time, you get wildly different results. So I realized that I had to have a better way to figure out which trades to skip and which trades to take.
Yeah, you mentioned, which is totally right. You mentioned the fact that a lot of people rely on like intuition or like how they feel. It's kind of, for them, it's how they feel, but there's actually rules behind it. They just don't really know that there's a rule behind it. And that's really tricky if you're someone who's trying to learn and you don't have these rules that you can apply.
Yeah, and he had a lot of intuition and experience that I didn't have at the time. So he kind of discouraged backtesting. But to me, I was already doing a lot of software development at the time. And I was like, it seems like it would make a lot of sense. So I, taking his advice, I didn't backtest for a while. But then eventually I was like, this makes so much sense to backtest this. Let me just dip my toe in and see. And I remember the exact moment, the first backtest I created, which I was emulating what I was doing manually. the very first back test was better than what I was doing manually. So I was like, gosh, here I can automate this, and I can do better than what I'm doing now. Like, it was sort of humbling because I thought I was gaining this intuition where I was, figuring out which trades to skip, which ones to take. So it was really humbling to see just, this automated thing that I put together with some pretty simple code that would do better than what I was doing. So gosh, it was such a light bulb moment for me that I was like, well, okay, why, what do I really offer here in my intuition? Like, I can immediately find something that's better. That was pretty humbling, but exciting at the same time.
A lot of people have this argument of, well, the only way to make money trading is with discretion, with like knowing when to get in, when to get out, when it makes sense to go in, when it makes sense to not go in. What would you say about that?
I think discretionary trading is a really good source for automated ideas. And a lot of discretionary traders don't realize that. Like the best traders I work with have a really keen sense of what systems can be modelable and which ones can't. So they continue with their discretionary trading, but they clearly identify strategies that can be modelable, and they backtest those and test those. And then it comes, those new automated ideas are completely additive to what they're doing. And they're kind of doing this on the side. So it's a very kind of symbiotic relationship between the two styles.
How did your first automated strategy go? Was it fully working well, or do you have any kind of pitfalls or issues you faced at that time?
It wasn't like a one-time cutover. People think, oh, okay, it's either automated or not. But there's a whole range of steps you can take to become completely automated. So I remember the very first thing was, okay, well, let me have something compute my position size automatically. And that eliminated some mistakes. And then I would have it automatically enter my exit orders exactly the way I wanted to. So each one of those steps was getting a little bit closer to full automation. But eventually, as I gained confidence over time, eventually the entry orders were completely automated. The exit orders were completely automated. But there's a whole range of steps you can do between that. So yeah, there's a big learning curve there, but there's plenty of things that can go wrong. But I was always, my dad was very sort of conservative with money. So I knew when I told him, yeah, I'm going to be day trading, and it's going to be a computer's going to be making trades for me. I knew I had to be completely like he was going to sort of say, "What the heck are you doing? That sounds crazy." So I knew I had to have a good plan. So I was always I didn't have a timeline for myself. I just gave myself plenty of rope and plenty of time to make mistakes and correct them. And I think a lot of traders, when they set a deadline for themselves, it's kind of, I don't see that working out well. You have to give yourself plenty of rope and, give yourself plenty of time to learn everything that you need to learn to have something to be a strategy be successful.
So deadline being you want to be able to make, or you want to be able to get profitable by that date or by that period, and you want to make that much money by that time, right?
Yeah, that typically doesn't work well, just because, just like software projects, when you try to say, okay, we're going to have it done by this time. I was a CTO at Trade Ideas for many years. It's just, it's so hard to predict. You just don't know what you don't know about once you get into something, and it just always takes longer than you think it is. And if you have that pressure on yourself to, okay, I have to have it work by this date, it just doesn't work well. Like you're gonna take shortcuts. You're gonna make sacrifices that you shouldn't make, and it's just better when you just say, okay, here's my goal. I'm gonna give myself plenty of time to do this. I'm gonna make steps along the way to do it, and I'm gonna get there.
I'm sure you work with a lot of traders who are fully systematic or fully automated. Do you see them having the same issues as, like the same mindset issues, like the same wanting to turn over strategies and wanting to tweak some settings and stuff over time? Or are they like fully detached from the algos?
Yeah, it's a good question. So typically, when I start working with a trader, it's a lot of times they have a strategy that's working well, and a lot of times they want to just completely automate it. But I don't think that's the right approach. The right approach is to create something that's kind of tangential to what they're doing. Like if what they're doing is working, keep doing that. But there's probably something related to what you're doing, in the same ballpark to what you're doing, that you can create a completely automated model from the ground up and have that be completely additive to what you're doing. So rather than have this cutover date where, okay, I'm going to go from completely discretionary to completely automated, it makes much better sense to start from the ground up with a completely new strategy that ends up being completely additive to what you're doing. So that's just a much better approach, because, you're going to learn so much about that process once you start going live, even with very small size. There's just so many lessons you're going to learn. And a lot of times what you learn there is going to help you in your discretionary trading also. So yeah, having a good process, not applying pressure to yourself to have a cutover date is just a really valuable thing to be able to do.
Do you feel like, I don't think they're changing fast, but do you feel like automated trading now these days is still reserved for people who know how to code and that need to be able to code well to be able to build that up and make it work?
Yeah, I mean, it doesn't hurt to be able to code, but there's never been a better time for traders to start automated trading with LLMs, ChatGPT, Claude. They're not perfect, but it really gives you a leg up, especially for somebody that doesn't have any experience coding. It's just so much easier now to start than it ever has been before. So yeah, but if you have some experience, then yeah, that's going to help you a lot, even with the LLMs now.
I feel like one of the issues is I see lots of people that have strategies they build and it either looks like too good and they go live and it fails. What do you think happens in that case, and how can they prevent that kind of stuff from happening?
Yeah, there's a bit of a learning curve going live, and a lot of times there's when you're looking at a backtest, and that you got a great equity curve, your hopes are up, you think, man, I'm done here. The work is done, right? I've created this theoretical backtest that's going to work, and they go live with too much size. That's a very typical situation. Or they have success for like 1 or 2 days at small size, and then they ramp up really quickly. There's so much learning you're going to do beyond the backtest. So when you get the backtest, a backtest that looks like it's going to work, that's really the first step. Going live with that, there's just so much you're going to learn about data, about what the backtest is. You very quickly learn that a backtest is theoretical. So it's always good to see how your live trading measures up to the backtest. So that's a very important step to sort of reconcile your live trading with the backtest. And you're going to learn a lot by doing that, because you're going to see, well, you missed some trades here. Why did the backtest took this trade, you missed it. Why did you miss it? So as when you go live, you always make sure to do some paper trading first, and then do some live trading with just really small size that's not going to make a dent, and you're not even going to feel it. And you can learn those lessons that you're going to learn without risking much money at all.
And that's an issue with data itself, is the fact that your backtest data won't look like the same data that you get from your broker, right? Or is it something else?
It could be many things. A lot of times it's, the fills that the backtest gets are too optimistic. So you only get some of those live. And, as long as have a good process and you're planning to do that reconciliation of your live trades with the backtest, that's where you're going to learn very quickly. And as you figure out sort of the shortfalls of your backtest, you can go back and make some adjustments to your backtest, or figure out a way to adjust your entry orders so that you do capture more of those trades. And but it's so important to have that back test as a reference because, think about the difference between discretionary traders and systematic traders. Discretionary traders, you don't have a reference. All the reference you have is really your experience, and you can only get experience by time going by. Where if you got this back test, you got this awesome reference that can go back many years. So it's a very quick path to confidence. So, trading is actually, it's not super hard if you're trading with small size, but it gets way harder when you try to scale up and make significant money. And there's a much easier path, I think, when you have this back test as a reference and you can see what's worked over a large period of time. And when you compare day by day as you make your trades live and compare to the back test, you can quickly extrapolate and see, okay, well, if I'd have done this for the past 10 years, I can see I would have done this. So it's a much quicker path to confidence and scaling up to your strategy to trade and make serious money with it.
When you look at, let's say, a backtest and some live performance, do you have a specific variance you're willing to accept from the backtest to live? Or is it like, do you know when it's kind of way too off compared to when it's kind of close enough to the backtest?
It's different for each strategy, but you need to have a plan for extrapolating and seeing, okay, well, today I missed these trades. Like go back and look at time and sales and see, okay, what would it have taken to get these trades that I missed? How can I adjust that in the strategy? But if you have a good process for doing that, you should be able to quickly see, okay, well, I'm losing. My live trading is, maybe 60% of what the back test is. And you can very quickly see, okay, well, yeah, this is going to work, or no, it's not going to work. The back test needs more work to be able for me to capture those profits in live.
I kind of want to take a step back. And you've been in the market for now roughly around 20 years. I'm sure you've seen a lot of people come and go, like traders coming to the markets, then they quit, might be going to something else afterward. What do you think is the difference between people like them and you who's in the market for 20 years now and keep working at it?
I've thought about this a lot. And I almost quit back in probably 15 years ago because I was in this big drawdown and I realized I have to have a much better system for adapting and creating new strategies for myself. Like I started off basically trading one idea. It worked really well. And then one year it had a drawdown. I was like, man, this sucks. But I was still running the back test. And after that drawdown, I looked back and I thought, man, if I hadn't have reduced my position size, I would have made a lot more money that year. So the next year, I thought, okay, I'm not reducing my position size this time. Had another drawdown, and of course, this one was brutal, right? It was even worse. So I almost quit. I mean, this is what I was doing, and doing all this work and losing money. That's terrible. Like having drawdowns is really that's the hardest part of trading, being able to trade through a drawdown. And I realized in that moment, okay, well, I've got to have a much better way to come up with strategies. So if I have multiple strategies, like it wouldn't really matter. I wouldn't be so dependent on this one idea. So I really set out to create tools for myself that just help me come up with strategies way, way faster. So I came up with a tool set that becomes now, I've eventually released this as part of an offering I have. It's called Mabe Kit, but it really allows you to come up with strategies way faster. And I've come up with 25 or more now that I trade each day as a result of that process. And it's just your trading is way more robust. I mean, the only thing harder than coming up with your first profitable strategy is coming up with your second. Because when you've got one strategy, you kind of feel like you know how things work. You kind of get fossilized in your thinking. It's hard to think about something else once you have this one idea that works. So, but your trading gets way more robust the more strategies you have. Your equity curve just is a lot smoother, and it's just you're not reliant on one idea that could go away at some point.
How do you come up with ideas now compared to before? Like, I feel like you could pick up a book, you could go online and find some ideas, but then you don't know if these are going to work or if they're good enough. How do you go about it nowadays?
A big part of what I do is at the end of the day, I'm doing a review. And this is like non-negotiable. At the end of every day, I'm loading things into my journal, looking and seeing, comparing to the back tests, see what ideas, making sure that those measure up properly. But also I'm coming up with new ideas at that point. I'm looking out like just beyond the filters for my trades. So I've come up with lots of ideas just by seeing, okay, what trades almost match my filters, but didn't quite match up. That's a good source for ideas. I've come up with ideas that, for new strategies that capture those. Another way is like every time, a lot of times traders who are getting into systematic trading will want to override their system for some reason. Like maybe they want to get out early. They want to hold on when the system tells you to get out. But you want to resist the urge to do that. And that's actually another source for potential new ideas. Like instead of overriding your system, make copious notes about what you want to do and then let the system play out, but then go back after hours and backtest that idea. Like what was it that you saw that you wanted to do? There's usually the seeds of some new ideas based on that. So it's really just, it just comes from being in a position to notice the unusual things. The unusual behavior in the market that's where strategies come from. So putting yourself in a position to notice the things and looking at that and doing it every day is extremely important. And that's where ideas come from.
How often do you want to come up with new strategies? Is it the thing you do like every week, or is it like a once in a while kind of thing, or how often is good enough?
I'm looking for things every day. So I've got sort of a to-do list of ideas, and those ideas, I've sort of prioritized certain ones that I think will give me more trades, more profitable trades, or something that's not correlated to what I'm doing now. But I'm constantly doing that, and that might be kind of overwhelming for traders to think about it that way. But I think usually a lot of times traders will think, gosh, I don't have really good ideas, but it's sort of like an old spigot you turn on. When you first turn on an old rusty spigot, the first water that comes out is kind of brown and rusty, but you let it flow and it gets clearer and clearer. So just the more practice you get doing this, and if you have a good system or good process for testing your ideas, you'll get better at this. And really the problem for new traders is they don't have a lot of ideas, but as you get experience, the problem reverses. You actually get too many ideas, and it becomes a problem. Which ideas do I test? And that's actually the biggest, the bigger problem once you get experience. So yeah, it's a process, and yeah, it's something you should be constantly thinking about.
Do you have a point where you would reach a maximum number of strategies that are live, or would you keep creating more and more as you kind of continue in your career?
Yeah. So the way I think about it is I'm trying to maximize coverage over the market day. So, I've got strategies that trade the pre-market. I've got strategies that trade the open. I've got strategies that trade just after the open. I've got strategies that trade the close and then the post-market. So I'm basically looking at, okay, how can I maximize my buying power? How can I utilize my buying power as efficiently as possible over the course of the day? So there could be parts of the day where I know I have spare buying power. So I try to create some sort of strategy or idea to capture that, to have to use my buying power fully during that time of the day. So yeah, I don't think there's any maximum necessarily, but I think the more you do this, the more you might come up with better ideas and replace strategies that you're running now because your new idea is just better and it's more profitable.
I want to give yourself a bit of time to tell people where they can find you, when they can connect with you after this podcast.
Yeah, probably the easiest way is I've got a free email course on backtesting. It's called betterbacktesting.com. You'll get emails, with the lessons for how to backtest, how to get started with it. Those come directly from my personal email. So you can just hit reply if you want to contact me about anything. But yeah, betterbacktesting.com is the best place to get in touch with me.
Awesome. I'll put the link below for that. People can connect with you there and get that course for free. And Dave, I appreciate your time here. It's been a lot of fun talking with you about trading, and look forward to see where you take this in the next few years. And we can definitely catch up and go back and see how you're doing in a few years.
Yeah, great. Yeah, thanks for having me on. You've done a great job with this podcast. It's very, very informative and very professional the way you do it.